The February 2026 Treasury release of 14.5 billion kwacha now carries roughly 50% more real value than the same amount released in February 2025. Here is why. In February 2025, the Ministry of Finance and National Planning released 14.5 billion kwacha to fund government operations, public services, social programs, and infrastructure. In February 2026, the ministry has again released 14.5 billion kwacha. On paper, the figure is identical. But in real economic terms, the value of that spending has increased significantly. In February 2025, 14.5 billion kwacha was equivalent to roughly 515 million United States dollars when the kwacha was trading near 28 to the US dollar. Today, with the exchange rate around 19 kwacha to the dollar, the same 14.5 billion kwacha is worth approximately 770 million United States dollars. That represents an increase of about 255 million United States dollars in purchasing power, meaning the same amount of kwacha now carries close to 50% more real value in the economy than it did a year ago. Several major economic changes explained this shift. First, the kwacha has strengthened considerably. A stronger currency means government spending stretches further when purchasing imported goods such as fuel, fertilizer, medicines, equipment, and other inputs required for public service and infrastructure. Second, inflation has fallen sharply. Early last year, prices were rising at more than 16%, eroding the value of incomes and government spending. Inflation has now declined into the 6 to 8% policy range, meaning the money released by the Treasury retains far more of its value when it reaches households, suppliers and service providers, of course. Third, energy supply has stabilized. A year ago, the economy was operating under heavy load shedding that disrupted production and forced many businesses and institutions to rely on costly generators. With electricity supply now more stable, economic activity is operating more normally and public spending delivers greater economic output. Fourth, food supply conditions have improved. The 2025 agriculture season produced stronger harvests. The current farming season is progressing under favorable rainfall conditions. Improved food availability has helped slow food inflation, meaning households' purchasing power has strengthened. Taken together, these changes mean that government spending is now operating within a far more stable macroeconomic environment. This stabilization reflects the economic direction set by President Hakainde Hichilema, who has consistently emphasized that the first task of economic management is to restore stability and credibility in public finances. The president has consistently stated that Zambia's economy remains far smaller than its potential, and that stability is the foundation upon which a much larger, more productive economy can be built.
In the 5-year window, our focus is to build the country's economy, to grow it, to create jobs, business opportunities, to increase treasury income, so we can continue funding free education and more bursaries and accommodation for those monks and momas.
The government's approach has therefore focused on restoring macroeconomic balance, reducing inflation, strengthening the currency, stabilizing energy supply, and rebuilding investor confidence as the starting point for expanding investment. Production and job creation across sectors such as mining, agriculture, energy, and manufacturing, where the 14.5 billion kwacha is going this February, reflects the same national priorities as last year, but the resources now carry greater impact because of the improved economic environment. The 4.4 billion has been directed towards salaries for teachers, nurses, police officers, soldiers, and diplomats serving in missions abroad, ensuring the continued delivery of essential public services. 3.7 billion kwacha has been allocated to debt service and the clearing of old arrears, including payments on domestic and external obligations as part of government's ongoing commitments to restoring debt sustainability 3.8 billion has been released for social support programs, including 2.1 billion for the Farmer Input Support Program, 1.4 billion for social cash transfers, and 200 million for the Food Security Pack, protecting vulnerable households while supporting agricultural production and food security. A further 1.9 billion is supporting day-to-day government operations, allowing ministries and public institutions to continue implementing programs and delivering services across the country. In addition, 737 million kwacha has been released for roads and infrastructure projects, supporting connectivity, mobility, and economic activity across different regions. While the nominal amount released this February mirrors that of the previous year, the broader economic conditions have shifted. Remember, last year's spending occurred during a period characterized by high inflation, electricity shortages, drought pressures, and currency volatility. Government spending during that period was largely focused on stabilizing the economy while protecting essential services. The current releases are taking place in an environment where inflation has moderated, the currency has strengthened, energy supply has improved, and agricultural conditions are more favorable. As a result, the same 14.5 billion now delivers greater economic impact across the country. Finance and National Planning Minister Dr. Stumbeko Musokotwane says government will continue to release budget funds in line with approved priorities while maintaining transparency through regular updates on budget execution. The objective, he explains, is to ensure that fiscal discipline and economic stability translate into tangible improvements in the lives of citizens through reliable public services, support to vulnerable households, and sustained investment in national development while laying the groundwork for a larger and more opportunity-driven Zambian economy.